Good afternoon. Welcome to Green Bicep. Today we're going to cover my 2023 list. And what does that mean? These are all the stocks that I think will fare fairly well in 2023 regardless of how the Federal Reserve pivots. So the Federal Reserve is in this situation where inflation creeps up, they're going to have to increase rates even higher than 5%, and if the economy falls apart too quickly, they're going to have to be forced to cut. So people are in those, two camps. What they've communicated is they're going to hold rates steady throughout the year. So, how was your weekend? Mine was pretty good. Busy, but good. Kids kept me on my toes. I typically on Saturdays go for a jog or a long bike ride, see some boars. You never know what I'm going to see out there. It's pretty amazing. And so let's dig into this. So this stock list. The review. Where are we now? So essentially, we're in a bear market ultimately. Early on, the sentiment is weak. We have housing has been weak, consumers have been weak, and manufacturing has been weak. So overall, things have been very weak. Saying that, coal stocks have been strong. Pepsi's been strong. Emerging markets have turned up. The yuan has actually turned up a little bit. It's been up for a little while now. So the yuan's turned up, and that's the Chinese currency. So there's changes happening. Where the way to get ahead is capital flows. So if you determine where the capital's flowing, we will navigate this potential bear market quite well. And it could be a soft land, and it really depends on what the Fed does. Employment's sticky. Employment is not going to drop that much. And the reason why, the boards just met, they reviewed their 2022 budgets, and they're like, okay, we have to operate our business. We can only lay off so many people at once. And so ultimately employment will not drop that much, and that might surprise some people, and I'm sure some people understand that as well too. So it's a bifurcation of what needs to happen and whose goals. The Fed's goal is, in theory, is full unemployment and low inflation, but the way they go about getting lower inflation is they raise rates, which ultimately increases the cost of capital, which ultimately gets companies like Pepsi to raise prices, which ultimately gets the consumer to buy less, which ultimately Pepsi is going to be forced to lay off, which they ultimately did in order to ensure their stock stays at a 52-week high. And so ultimately the person doesn't have a job, and then eventually Pepsi sales will start to drop. So it's a cycle that the Fed has to, that's how they go about doing it. So the list, gold. You want to own gold. The reason why gold needs to be owned is all the central banks are buying gold. They've been buying it for a while. Since 2008, they've been buying heavy hand over fist. And since 2022 Feb, when the Russian war started and we used SWIFT as a weapon, the United States of America used SWIFT as a weapon, meaning we cut off money from people. And so now people are looking at the world differently. They're like, do we need to own gold to back our currency? Do we need to start a new monetary system? That's what BRICS Plus is, and that's what they're talking about. A press release came out last week from China actually talking about that. So there's something there. Bitcoin miners, this is a asymmetric bet. Bitcoin halves every 4 years. That means the inflation rate is cut by 50% every 4 years, and whoosh, that's why Bitcoin shoots up every 4 years. This is an asymmetric bet on that. Vietnam, Indonesia, Malaysia. That area is hot. They're providing employment to China. They're young. The population's grown. Keep your eye on that area. If you could find an emerging market ETF with that exposure, go for it. EEM is an ETF with a lot of exposure to China, financials, and tech. That's why I didn't put it in here, because there's just so much tech and financials I wasn't comfortable with. I was really looking for more higher beta moves that would and I didn't find anything that I jumped out at me. Energy, that's the lifeblood of a society, is energy. When the light bulb was invented, society efficiencies improved. When fossil fuels came about, people started, time and money and energy is interchangeable, and fossil fuels made it so you could travel faster. There's planes, so efficiency. So we need energy. This XEL focuses on ExxonMobil and Chevron and some of the smaller guys, but it's just exposure. I think it would be wise in the second half of 2023 to have exposure to energy. Metals and mining are critical as China opens up And just in general, we need metals and mining. And if we're going to continue to build out infrastructure across the world, there's a lot of infrastructure that still needs to be built. It's imperative. This ETF exposure to uranium, steel, aluminum, rare earth, and gold. All of them. Plus, it's global. So as the U.S. dollar gets weaker, and it will, the more we have a trade deficit, the weaker the U.S. dollar gets. So Japan typically runs a trade surplus, and that has allowed them to print so much money all over these years. That's why they've gone away with it, because they always have a trade surplus. And so they've been able to just print like crazy. We run a trade deficit, and we've been able to do it because we're the global reserve currency, and everybody wants dollars in emerging markets. So it's a different scenario. If it's a smaller country and they ran a long trade deficit for too long, then you're going to be like essentially like Argentina with 80% inflation. This is the way it is. Eagle Bulk Shipping. The shippers are all trading pretty much all below a P of 10. Their ROA, their return on invested capital, their growth appreciation period, you name it, all their metrics, they're stellar. This area is ripe for M&A activity. Very appealing. That's a smaller one. Eagle, less than $1 billion. Golden's over $1 billion. So these guys are on the smaller side, but that industry reminds me of gold actually in 2002 or 2003 when Gold Corp and Hecla, well, I don't think Hecla merged, but Bema Gold, all these gold companies came together. And I feel like the shipping industry is ripe for that. I don't know like the culture and all that within the industry, but it seems like I could see that happening in that without a doubt. Dry bulk, this is basically it takes all the dry bulk shipping, all the rates, and this is just a proxy of the pricing for that industry. So as it goes up, this is a way to invest without any key man risk or exposure to boards. Dry bulk shipping. The Baltic Dry Index is the index most people watch. Right now it's at a low and it's starting to turn up a little bit. Paramount Global, Warren Buffett owns this company, but it looks like they're going to go bankrupt. So he came in there, swiped in. They're going to probably clean it up, increase their ROA. It's one to watch closely. There's no guarantee they could turn around, but there's a lot of intellectual property. There are movies that could have residual income reoccurring, and it could be, it could shock to Netflix or even Disney if they play this right. I think there's a lot of opportunity here. And last but not least is cash or bonds. Cash, you want to have it because if we do get interest rates above 8%, things are going to get nasty. You want to have it so you could buy. Bonds, you could lock in a bond today at 4, 5, 6%. Hold it till maturity, very little downside risk. So bonds are, hey, if you need just some money, you're retired, go with bonds. Sell everything and just own bonds if you're retired. There's no reason to have all this risk. If you're younger, then you want to do your research and explore things, then you have more exposure to more different things. If you like this content, enjoy what I had to say today, please give me a like. Commentary is appreciated as well. Folks from Indonesia and the Philippines and Vietnam, I'd love to hear from you because I've seen some activity on just throughout the system here. And so, feedback's appreciated. Thank you for your time. Green buy, sell out. This is 2023, my list that should navigate through this cycle. Unless we get a 30-40% correction in the market, say we go down 30%, liquidity dries up, and that's where everything kind of gets squeezed. So you can only be protected so much, but I still expect some of these areas to do quite well, especially if China still stays online, and China has a potential of doing some form of stimulus for the local economy, because President Xi understands he has to control the people in such a way that they're happy, and that means they're not the happiest right now. So there's gonna be stimulus in China. I don't think people are expecting as well. That's part of this thesis too. Thank you for your time, and I'll talk to you later. Peace out.